All right, this is the Tortoise Weekend Report for September 13th, 2014. We have a market that is in bullish normal conditions on an annual basis using weekly RSI 14. We're in the high end of neutral at 64 out of 100. On a short-term basis using the 10-day NDX, we're oversold with a score of 19 out of 100. So that gives us a short-term buying opportunity. We ought to see a lot of channeling and overreaction signals among the indexes in the Dow 30, and that's in fact what we'll see. Taking a look at the market mosaic, long-term trend price relative to the 200-day moving average is at 5.92%. That gives us a 4% cushion to sideways markets. The slope of the 50 is red bearish, and so that's decreasing as the market has started to age and is rolling over a little bit here. ADX is non-trending with a score of 16.7. That's in the neutral zone. So what that means is that swing trading has room to develop a nice 2-week trend out of these conditions because the market is so untrending or non-trending. There's room for swing trades to really develop here. The relative volatility is getting very quiet, back down around 0.64%. That's at the low end of normal. The risk index, which is the 30-period moving average of the VIX divided by the 10-period, has a score of 1.03. The threshold between risk on and risk off is 1.0. So the risk index still has us favored to hold riskier assets, thus the risk on. When we take that score of 1.03 and compare that to the last 5,000 trading days and find the standard deviation and the average, that gives us the Z-score of risk, or the risk Z, and that's right now reading 0.27. This histogram is a 90-day time series of that risk Z indicator. You can see that we had a nice move from -2 standard deviations to +1.5. That's 3.5 standard deviation move. That corresponds to a really nice trade in VXX and XIV on the long side. And it rolled over at 1.5 at that extreme condition and has now come back to 0.24. So we're right on this boundary now between in the volatility trade. It can go either way still. But that was a really nice swing trade, and we'll take a look at that. In the blended month rebalancing, the next reevaluation is due on or about 1 October. These are the current holdings right now, and the current leaders as of the close of business on Friday would have these as the leaders. You can see some alternate asset classes starting to enter now, with treasuries making an appearance in the ETF 13. These are the current leaders among the Dow 30, the ETF 200, and the ETF Max. ETF Max is about 1,300 different ETFs, and so these would be, would think of these as relative strength leaders. You can still see China and Thailand inside there. Moving on. Next up, just a quick look at the ETF 13 and 32 portfolios using that blended month rebalancing so we can see what's going on. This is a case where, you know, the system also provides interesting information. We got about half of the symbols are now on a cash signal, and that's price compared to the 4-month moving average. The strength still is in technology, Latin America, but now you're starting to see some other riskier elements starting to hit their 4-month moving average. Treasuries, emerging markets, U.S. real estate, Asia less Japan, Australia, and the Euro-Asia mix, which just went negative for both 3-month and 6-month. So certainly lagging behind the U.S. in that regard. Among the ETF 32, again, you see the same thing. About half the symbols are on a cash signal. So that's there's been some weakness creeping in this last week to 10 days. And so it just still highlight that the top symbols still China, U.S. tech, the BRIC countries, the XLV technology spider and XLK technology spider, XLV healthcare, and then Latin America. And now we're starting to see again some weakness in Brazil, treasuries, emerging markets, utilities are even weak. SPY is still doing a pretty good job holding its own against all the ones below it. So the three strongest of the sector spiders, financials, healthcare, and technology, is still where we should be concentrating our target selection to take advantage of relative strength. Moving on. Among the ETF Max candidates there, India still and China still are dominating the top slots. Biotech is the first non-China India. Thailand remains strong. Biotech is of interest, as you'll notice in the number 7 position here, because it is green and white, and China Trend Pilot, also green and white. China Industrials, green and white. And again, green and white is an indicator that the outperformance is relatively recent, over the last 3 months rather than over the 6 months. So we have reason to believe it's early in its life cycle of gains. Here's another biotech at position 32 is green and white, and the China Alpha Dex also green and white. So those are candidates for framing shorter-term momentum trades that we can take off that report. Next up, looking at the S&P 500 through that same lens. We're going to see U.S. Steel continues to just march. Seeing a little bit of weakness now in Vertex and Intuitive Surgical because they are, strengthen those, green and white. So position 13 and 16. And again, if you're looking at framing some trades and looking for continuation patterns, all of these symbols that are green and green on the 3-month and 6-month are things we ought to be looking at. So Intel, Alcoa has been excellent for us. Tenet Healthcare. And then you can also see the sector that each of these symbols is in inside the S&P 500. So you'll notice the strength here in, Intel, Windstream Holdings are both technologies. Covidien and Edwards Life Sciences are XLV, along with Gilead Life Sciences. Excuse me. So that's how I use this report. Here's some more staples. The NASDAQ OMX Group and NetApp Inc. These are all relatively newcomers here at position 25 through 27. That's the green and white feature again, along with Amgen, green and white. So that our way of thinking, that still has some room to potentially grow longer term. So we can take a look at some of those charts when we get done with the presentation here. All right, moving on. Next up is the market health check. Excuse me. All right, so our vertical blue lines are 10, 20, and 30 days worth of look back from today's date. We can see what that market has been doing. So in that last 30 days, again, this is that swing trade that I want to remind you of. This corresponded with that bottoming out in the risk Z. And then when the volatility dried up, we get this move in SPY, but we also get an even better move in XIV, which is the inverse volatility ETF. And that turned out it pulled into a nice swing trade. And then as the market and XIV have started to roll over, that corresponded with that decay in the risk Z. So what we get is when we see that risk Z is at an extreme location, let's see here. When we see that when price was down in this location, that risk Z was at -2 sigma. And then when that moved all the way up into here, that was at +1.5 sigma. So this move is made available to us through the use of that indicator. That's why I like it. All right, some other things to look at. The dark blue shaded area is the river. That's the 30-period Bollinger Band ±1. The lighter blue shaded area is the floodplain. That's the Bollinger Band ±2. That gives us like 95% of the price data of the last 30 days are within those dimensions. This red line here is the Bollinger Band mean. That's the middle of the river. This snaky looking red ribbon is the dragon, okay, and that is the 10-period Bollinger Band ±0.5. That gives us an early warning when trends are changing. The horizontal red lines are giving us support and resistance levels. These are support levels that should hold, that used to be resistance levels. So now the market is holding precariously on this 199, which is still above the Bollinger Band mean, but is putting the question to the market. Is it still prepared to move out here? Are we finding support? So if we zoom in and look at that a little more closely, we'll see what I mean. So what we have here, I want you to notice now the parabolic stop and reverse has given us 6 dots, 7 dots, excuse me. So this sideways choppy and this weakness that has occurred here, that's warning us about failure to follow through. We really need to see the market get back above this 201 before I really want to be automatically long again. The downside support here at the Bollinger Band mean and the 50-period moving average, it turns out, right around 197.5. This blue channel is the 10-period regression line, is the central line. That's the 10-period. And then the outer channel is formed by the maximum excursion from the regression line during the look-back period, which happened on all 4 of these days here. So that's kind of a sign of weakness. And you can see that that slope is now negative, whereas this black line is the 30-period regression line. And again, the channel is formed by the maximum excursion during the look-back period, which also occurs here. So we've had a number of tests of both of those regression channels. You can see the 10 is already rolling over. Now this line here is that sine wave looking curve, is the slope of the 30-period regression line, and you'll notice in that blue circle that the 30-period regression line, which is this black line, the slope has been improving for the past 30 days until lately. This has been enough of a pullback in these 10 days here. That pullback has been enough to now cause the slope of the 30 to start decaying. It's still sloping up, and that's still favorable, but it's testing the bottom of that channel. It's testing the bottom of the 10 period. It's testing the support level at 199. What's got to hold is this 197.5, which is the Bollinger Band mean and the mean of the river. Any evidence of resumption of the trend here, we can buy that dip. So really, I'm looking at if it takes out Friday's high, I'm a buyer north of 200. But on the downside, I'm respecting the fact that if it fails here, it gets to 197 and then 196.5, which is the next level of support. And let's see what else we have for support below there. The next support level, excuse me. So support levels here at the bottom of the 10 channel at the Bollinger Band mean at 197.5, 198.5. We have one here at 196.5, which was the start of this move, the second leg of this move up from 20 days ago. Triggered with a response here at 196. If that fails, then it drops to 194 pretty quickly, which gets us to the bottom of the river. And this is the one that has to hold in order for the bull to remain intact. So that, to me, looks pretty crucial. Chip just observes, he looks at some supply and demand analytical techniques, and in the futures, he says there's a probability for a big drop ahead, and in the S&P that would be from this 197.5 down to 195.5, which when you translate that from the futures gets you back down around this level to the bottom of the river. So this would still be within the noise of a bull market, right? Because the height is 200 or 201. A simple 5% pullback is 10 points, which can get it all the way down, to 191, and that would still only be a correction, a 5% correction within a bull market. So there's a lot of tactical room for trading to go on in here before anybody thinks about panicking. So that's why we're still in the zone where if I get any kind of resumption of the upward trend, I'm ready to get on that. But I'm also sensitive to the idea that this pullback to 194 and below is a real possibility. And it wasn't that long ago before we saw a move of just exactly that size. Let's as we go back here a little bit. This is the size of that the last 5% pullback, which brought it all the way back to 191, and so the rebound to 201. If this were to be symmetrical, a move back to 194 still preserves this a low and a higher low. So to me, any rebound, any kind of resumption of the bullish trend between where price currently is at 199 and 194. I still treat as a buy on dip opportunity, and I'm looking to get back in. But as I show you here with that yellow zone, in this zone here, which is between the swing high and this last support level at the bottom of the river, I'm waiting to see intraday price action confirm the upward move before I pile on intraday. If it were to get above 201, which is a new all-time high, then I'm ready to get on any upward trend. By default, I have an upward bias. When I'm in the yellow zone, I'm a pure tactical trader, and I go in the direction of the daily market move. And you'll notice in the past 30 days, all the big red range candles, which are great for frogs and great for intraday traders that can take advantage of a strong directional move. So there we are. That looks like the market type and market opportunity to me. Meanwhile, if we take a little bit of a wider look, we can see that the percent price oscillator closed the jaws on the upside closed. It signaled a nice move here from blue circle to blue circle, which corresponded with this move to this move. And now the jaws have opened to the downside, which is warning of the downside move back to the Bollinger Band main or possibly the edge of the river. So that's sort of the normal non-surprising move. Okay, so moving on. In the ETF2 regional report, which is up next, 5 out of the 10 global indexes are on cash signals rather than buy, and 5 are on buy, and that's what gets us at 50-50. Theoretical model allocation. Still bull normal. The S&P is better than the EFA, so the S&P with a score of 78 is better than the Euro-Asia blend, which is at 71. So right now the U.S. is still favored. Inside the U.S., it's technology, large caps, mid caps, small caps. The 2 strongest sectors, Latin America and technology. The 2 weakest sectors, Europe and the Euro-Asia blend. Inside the sector spiders, we saw before strength was in healthcare, technology, and financials. Only energy is really weak in the yellow here. So we can use that to focus our target selection. Next up is the world market model. First, to look at the U.S. Small caps are all weak, below average in the yellow. Everything else, the mid caps and the large caps are above average in the white, and then technology, the Qs, are very strong in the green. Latin America is still strong at 82, Mexico at 83, but you notice Brazil has pulled back a little bit. We're going to see that as an opportunity here when we look at the charts of interest. Japan, Asia less Japan are above average, all of Europe below average. You notice the European countries all suffering, and all of the Asian countries not suffering. And you see strength in China, Hong Kong, India, Thailand, Philippines, and Vietnam. The tech phenomenon is a global feature, along with the healthcare is strong also. It's the international large caps pulling together. So sort of business as normal here. And then finally, all the commodities deeply in the red. So the market is pushing us to U.S. large caps here, especially the tech leaders. Looking at the ETF 30 lens, that's just an alternate way, a different methodology, but which shows us basically the same kinds of trends, it turns out. The new strength are these here that are in the green and white. You know, Mexico, the Qs, U.S. tech, base metals, transportation, IYT still doing well. And then the real leaders still India and China, Thailand, biotech. Let's move on to the daily report. Signals in Asia less Japan, Latin America, and emerging markets for the overreaction system. And then the channeling system fires for the U.S. S&P. That's a very good thing because that's been the strongest index. Mid caps, and then the full range of globals with EFA, Asia less Japan, Latin America, and emerging markets. The 10-day min pain tells us the ones that have lost the least from their 10-day high. So Goldman Sachs, Cisco, JP Morgan, Microsoft, Johnson & Johnson, the 10-day losers. Chevron, Home Depot, Caterpillar, ExxonMobil, Verizon. Then among the ETFs, looking at the ETF 100 list on that, Brazil, gold miners, oil and oil services and production. So a ton of good choices here among the channelings and overreactions among the large caps. And then we get quite a few 5-day downs for both ETFs and then CAT, Chevron, and DuPont in the 5-day down triple screen. I like Home Depot, Intel, Disney, and Walmart. This says that upon rebound, you can play those on the long side. The auto framer shows us the ones that are better than 2-to-1 based on reward to risk ratio and trade location for swing trading. So those all look pretty good. We're going to look at some of those charts. Next up is the Dow Tactical. There's a lot to choose from here. Again, lots of channeling and overreactions. Plenty of 5-day down and triple screens and 551Ws. Just notice these big name leaders here. Home Depot is number one in the max pain range compression and is 3.3-to-1 reward to risk. Caterpillar 5.8-to-1. Chevron 3.9-to-1. ExxonMobil 3-to-1. We have a handful of frog candidates still. And then Caterpillar, Chevron, and ExxonMobil got to be of interest because of the RSI2 scores in the single digits as well. So a lot to choose from. I would just note here the Goldman Sachs, part of that resurgence in the financials. Notice on the NDX for 10-day, 1 month, and 3 month, Goldman Sachs closed at a new high compared to the previous trading range by significant numbers with scores of 118, 110, and 105. So Goldman Sachs made a strong breakout and could be and probably is leading the way in the financials. So we'll take a look at that symbol. Next up, looking at the ETF 30 Tactical in the same way. What really springs out to me is the large number of them that are on single digits for RSI2. And so Brazil has to be on our stalking list, Latin America. This is either a changing of the guard or an opportunity to buy strength if and when it resumes, not until. Lots to choose from on the auto framer. Some good 5DD candidates and plenty to choose from on the channeling and overreaction. And that's just really an indication of a market condition where a bunch of indexes all go down together and have all pulled back. And so I think you got to look at this from two ways. You have to have two scenarios in your mind. If the market recovers here, where is the strength? The easiest and first place to look will be among previous relative strength leaders, and that's going to be the U.S. large caps and then Brazil and Latin America. Or it's going to be in new leadership. And you could say, let's take a look at the U.S. financials and maybe China. Now, if this pullback continues, however, if there's more failure, you can then take a look at what are the weakest sectors and look to get short those. And that would be things that are like 5-day down already. And then if the market starts selling off and they go below their low from Friday, then those become relatively low-risk shorts for 1 day. Or you can just kind of take the easy intraday play and just look at VXX, which is going to benefit from any broad market weakness. Okay, moving on. Next up is the auto framer. Excuse me. And we have a ton of quality symbols to choose from. You can see the risk to reward ratios ranging from 6.5 in the treasuries, which stand to benefit from any Additional equity market weakness all the way down to Travelers, which is at 2.2 to 1. It's also that's a good short upon failure. Travelers is looking good. So you have a lot of high quality names here in the middle that all test out very well just on a trade location basis. Looking at the regression line fractal framework, these that are in the top section are the ones that are the most below their own RL270. So that says they have pulled back below what we would think of as long-term fair value. We think of that regression line 270 point value as the long-term fair price. And so these are ones that have pulled back well below, and the reward to risk ratio shows you how many ATR multiples they are below fair value if you buy that line of reasoning. So AXP is 8.19 ATR below its regression line. Caterpillar is almost 6. And we saw some good tactical pattern signals for Caterpillar, so that becomes an interesting one to frame, knowing that to get back to fair value, it's still a 6 ATR trade. And an ATR in Caterpillar is $1.13. So even if you're using 2 ATRs, a $2 stop, you still have a 3-to-1 trade frame available for swing trading in Caterpillar. Similarly, the ones in the bottom stack in the red here, this is how many standard deviations they are above their 270 regression line. So these are all the ones that are leading the way. So Intel is 5 ATR above its 270, Goldman Sachs 4.5, and so forth. So if you want to look at resumption of the trend, these are going to be your relative strength leaders here. And so in an up market, if these things are outperforming the market, you know two things: that people are buying the index and they're buying the former leaders, and that becomes a low-risk trade for intraday trading. And you can supplement your swing trading with that technique. So I leave the rest to you to find your favored targets. All right, so I want to shift now to charts of interest. Let me call up those. Okay, just a quick look at some of these. Okay, the first one is Mexico. This is a 2-hour regression line fractal framework chart. So you can see 270 is that pink line, the purple line. That's the 270. This gray shaded area is like, I think of that as a buffer zone. That's a 30-period Bollinger Band, plus or minus 1. On the regression line itself. And so when that regression line crosses its own neutral area or this border area, this is where I think of the long side trend as beginning. And then when it violated here, that's certainly indication that the upward move is over, because it is now past the point of fair value and then beyond that noise buffer. So that's how I use that ribbon to help interpret. So some other things that I look at, I look for these maximum excursions of the 10-period regression line, in this case the blue line, from the purple line. And those look like opportunities to me for short-term reversion to long-term fair value. So I look at the RL10 as short-term tactical trader enthusiasm or panic, and that peaks out up here when it's at 73 and some change. You get an RLCO here where the 1030 crossover occurs, also with the 90. That's what that green line is, and then that sets up a target of back to the 270 regression line. Well, The size of this move here is almost the size of this move on the downside. And now what we have is a one-day evidence of a short-term low being put in here around 70. So in Mexico, which was one of the strongest countries in the world, in the strongest sector in the world, Latin America, has just had this move from 73 to 70. That's about a 4 or 5% move, and showing some signs of a local bottom. So I would be prepared to buy this on a breakout above 70.9. I'm ready to buy that with a target of 72. And then with a stop and reverse down here, if I saw a violation below Friday's low, then I think what we got is something like this happening as the next target to the downside. And then we're already on the wrong side of the, or on the downside of that 270, which is now flattened out. I want you to notice that the last time it was flat, fair value was around 70 and a quarter. The slope of the RL 270 was flat. And then we had this nice move up to 73. Now we've come back to that price level. So now if it fails, I think the distance above here is the distance we get below here, and that's why I put the target on the downside around 68 bucks. All right, so this is what I would consider to be a critical state in Mexico, EWW, and this is a nice trade location because we have a critical, a well-defined critical state and profit targets on the upside of, back to the 270. And how far above the 270 can it get? It can get that far, which still gives us, a price target of 73. And then a failure on the downside looks like it can get to 68 pretty easily. So very nice. Yeah. Yeah, EWW is a 551W, and that makes it a perfect candidate. Thus the first chart. This one is also a two-hour chart, which I like for framing swing trades because it lets me see about 20 or 30 days with some of the intraday price action. And what I like about this is you can think of this as a sideways quiet channel. I like the sine wave here in the 90, which is now rolled over. And so, if technology fails here, the next thing we're going to see is 97 and then 95. But if we get a breakout above this price level, I mean, this is the strongest U.S. sector, and the U.S. is stronger than the rest of the world. If we get this breakout in the Qs above 100 and a quarter, off it goes, and we should be ready to take that. We could take this trade on the downside in the futures, for example, and take advantage of people that are selling in order to preserve their gains from this last breakout. So the Qs is also in a tactically interesting critical state. Next up, Home Depot. This is has been one of the strongest movers because of this accelerated move. But now this pullback has made it one of the 10-day max pain candidates. And so we're still well above this 84 price level, which was the previous support level. And we're testing this whole area of support inside and around the RL 270 and that little gray buffer. And so I would be willing to get short here at 88. If we see a violation, then I think we see that move pretty quickly. But if this holds and we get above the 270, I'm buying at 90, and my targets would be that 90 period regression line, and then the previous swing high at 93.5. And then if it gets above there, it's free and clear, off we go. So I like this as a critical state here in Home Depot, with the first price move to here, then the second one beyond. Now we're going to look at some dailies. This is EPP. This had been a very strong index. I want you to notice this. We are back to this whole fair value cluster around here between 50, 30. This move up to the top was the aberration. So what we can look at here is if this holds at 49.5, if this price holds, then we can see a price back up to 51 and then 52. But if we fail, especially, we can be looking to test at 49.20. So I'm willing to go short in here and then really short here. That would be the sign of broad market weakness in Asia less Japan. But you can see right now that price has violated the 270 RL. Price violated the 270 RL. It violated out of the buffer zone. It violated this last pullback. And then really, if it gets below 49, it's look out below. So EPP is very vulnerable, but it's in a critical state. It can have a nice rebound here as well. That's what makes it an attractive short-term candidate. Okay, next one. ILF about in the same condition, although it's not as weak as EPP was. You notice it's got these series of rising lows, and each one of them was about this far above that 270, which is still rising. This is a natural place for it to find support at 40, which would be still above that 270 and above the buffer zone. And then a rebound, the rebound channel should look something like this. And so the halfway point, is 42, somewhere in here. And then a test at 43, and then the upward channel at 44, and then the same thing on the downside. It violates, it should get to 39, 38, and 37. So ILF is in a perfect critical state as well and can be played on an intraday basis in either direction. I would actually prefer to do that with EWZ, which is going to look like about the same chart, just because the volume is better. And it has fallen a little further. So here's Brazil. And again, the price move here is right in line with those previous pullbacks and swing lows, but right now it's at the 270, and it penetrated here into this buffer zone. So any weakness can be shorted instantly, and then especially if it gets below 46, you can add a second position. But if we get a rebound, just notice the size of these rebounds. Those are like $3 moves. Each of those moves is $3 or $4. So a rebound from here should get us at least to the 270 or to the 90 regression line, and then a retest of the previous high. So you've got some nice targets here. And just remember that prices currently, and this pullback, price feels exactly like it was at each of these three major points. And in each case, it felt horrible, but the rebound was sharp and lasted multiple days. So you can get this on an intraday basis and be able to trade it comfortably intraday. Has a lot of volume, EWZ. All right, so the last one I want to look at, we're just going to look at EWZ through a more of a traditional mode. So this is just looking at it from a candlestick framework. And again, you should see the same things that we just saw in the previous one. Now what we've added here is some of the price at volume indicators over in here. You can see all of the selling and all the volume that's in here. And again, it doesn't take much to think, look, if it breaks below the low, off we go, because we're out of the river, and down we go. So this could be the end of Brazil's run. And then the move on the downside, the move on the upside was from 48 to 54, so that's 12%. So there's another $6 on the downside. This can get to 42 if it was just going to be symmetrical. So let's take that opportunity into account and focus on Brazil this week. Okay, so that's everything I wanted to cover today, and I'm going to stop the recording here so that I can get it processed and then uploaded at YouTube. But lots of good ideas to be looking ahead. I do want to show you something over here at Campfire, if I may. There was some problems with the Yahoo mail server. Not everybody was getting the reports. I can't sort out why that was happening. So in the meantime, what I'm going to do is, let's see. I've added a new chart, or a new room in Campfire, the daily and weekend report archive. And so, starting this weekend, I'm going to start posting the daily and weekend there. That's open to guests as well as subscribers. I mean, I would invite you to subscribe, but while you're still checking out the work, you can have access to that room. When you go there, I don't intend for that to be a discussion room. Really, that's just a place for you to find the reports. So when you click on that, you should get, yeah. As you can see, we get the you get the weekend reports here, and then that will show over on this side. And I'll start putting the dailies in there as well. That way, if for any reason you're not getting the daily through the email, you have a place that you can go to get that, to get those reports. Okay, so that's everything I wanted to cover for tonight. Got some catch up to do. We had a lot of soccer that was played this weekend. Girls did well. Appreciate all the support from the folks out there. You'd be proud of the way they play. It's a great generation of young people that are going to be well prepared to take over for us, from us here. So take good care out there. Keep your wrist measured and your powder dry. And we'll see you in the chat room and in the evening reports. Take good care.